Hello, and welcome to Trading Without Fear.
Hi, so welcome to Trading Without Fear. I'm here with Quinton, and he's going to go over a little bit about how he was able to get over the PDT rule and some of the struggles that he kind of came across, how he overcame them. So we're just going to kind of jump right into it. So Quinton, go ahead and talk a little bit about yourself.
Sure. Yep. So my name's Quinton. Been trading since March 2020. I think a lot of people started around then. Got interested in trading after I saw the huge crack of, I think the major indices dropped like 10%. I was like, this is probably a good time to buy stocks. And it was, turned out, and I've been trading ever since. I was pretty good at digging a deep hole for a good year and a half. Pretty depressing to look at the profit and loss, but everybody usually starts that way. But yeah. So I've been doing it pretty much every day since. I do have a full-time job, so I try to fit it in as much as I can, but it's definitely not my main source of income, which I think helps. Also limits the amount of time I can do it. So there's pros and cons. But I was fortunate, speaking of PDT, I was fortunate enough to be able to, my original account was like $100. And then I think I added money to 500, maybe up to 1,000, and I just kept bleeding it away. So over time I added about maybe 4 or 5 grand. And eventually profit and loss wise and commissions wise, just basically ate it all away. And I ended up, and Eric, you and I were talking frequently in this period too, but I sized up huge last January. So I went from about $1,000 to $2,000 account to 20 grand, and did not go well. It was awful. Had huge losses. I was just not prepared for the size. The best way to describe it is just deer in the headlights. And I know Mark Douglas talks about this a lot, but like when it's just like a primal thing. When you're too sized up and you see just a normal, like a few ticks against you, you just freeze up. You're like, I can't take that loss. It's too big. And you just physically can't. And you just watch it get worse and worse. And it's just horrible. So I had a couple of those and very quickly just blew up the amount of money that I was comfortable losing. Mm-hmm. Yeah, thankfully I was not gonna ever, basically I was able to trade with, I wasn't able to trade with about 18 grand of that. So I would never be able to lose that any more than 2 grand out of the 20K I started with. So
why was that?
Went down to about 18 grand and I was like, well, I basically blew up my account and reset and started sizing up really smartly after a long summer of bleeding. But last August, started sizing up. I basically restarted mentally with $300 to trade with. And I was like, I'm just going to follow a system. And you and I were talking a ton at that point too. Mark Douglas had some really good resources that helped me on that. But turned over a new leaf August and was like, okay, $300 means I'll probably have a position size of, at that time it was $500 because I had been trading with bigger sizes than that forever. So anything less than that was like, it wasn't going to cause me any issues to have $500 size.
Yeah.
I had that size for the whole month. And I ended up making, I think I made $500 or so. And does that make sense with the size of my trades, but also what I was able to lose? Because I know the account sizing is kind of funky.
Yeah. Okay. Yeah. So with you, before you're saying that you couldn't lose any more than that $2,000. So was that a predetermined amount that you already had, saying, I have $18,000 to just save, I can't go any below that, or was that borrowed money, or what was the reason behind that?
Well, essentially, it was just money my wife and I had discussed. Like, this is our savings, and I just can't play with it. I can't lose that. And I was like, okay, I'm not going to mess with that. But I was just blessed enough that she trusted me to use it. And I just had to have self-control not to blow it. So
yeah. And so was the idea to try to get over PDT quicker, or
Yeah.
what was the whole idea behind that? Just to get
Definitely.
over PDT?
Definitely PDT. Had my eyes on that ever since I sized up
Mhm.
1 year ago now, January. But was just not ready for the size. And I'm super scalpy. So I use a lot of buying power, every day. So even up at 20K, I was running out of buying power regularly.
Yeah. And that's through the $2,000 that you had on the, is that a daily allowance? Was that a $2,000 daily allowance, or was it like $1,000 per day?
It was kind of hard to explain. So, my account size would be about 20K, but I knew that in my brain, my account size was only $2,000. I'm like starting from zero, which was, 18,000. I made money, and I was like, okay, if I blew up, it would be losing 2K down to 18K, and I would have no more money to trade with. So I just used the buying power of the bigger account that way, and just tried to build on it.
And were you on your margin account, or did you have a cash account for that?
It was all cash.
It was all cash. And so you just kind of said, this is how much I have each day, and that's all you took. So what markets do you normally trade?
I would actually run out of cash. So I would have like,
quickly.
Yeah. So I would just do whatever I had every day.
Yeah. And what markets do you trade? Do you predominantly trade the OTCs, or is it listed, or is it a combination of both?
Yep, definitely predominantly OTC. I've dabbled and listed a little bit, but I've found it really tough to transition between the two. Like the skills that I'm good at in OTCs they're just super different and listed, because I rely a lot on level 2, and it's just totally different. Like my heart rate when I look at listed at level 2 is just immediately like 25% higher. It's just,
and that's one of the reasons why I don't look at level 2s at all. I use it as a guide to get into the trade, don't base my trade decisions off of level 2s at all. And I started from listed going into OTCs, back into list, and I kind of flip-flop back and forth. But lately, I just haven't touched OTCs at all. So with the OTC market really cooling down lately, how have you been able to still maintain your edge in the market?
Yeah, it's a good question. I thought about it a lot, and I think the easiest answer is level 2 and just trading momentum. So the last couple months, I've been just growing more and more comfortable, like just gauging momentum, and I just think this is going to go up. And if the level 2 and OTCs have been really liquid relatively the last couple months, it's been tricky. But I've just tried to push through my hesitations, and if I think the stock is going up, I need to be in it. Whether that's just a couple percent, it's usually a couple percent because I'm usually pretty scalpy, but I'm like, I'm gonna take this for however high it goes.
And do you normally trade the same ticker multiple times a day, or do you get in out of the different tickers? Like, how do you determine what your pattern is? Because I've seen some of your charts, they kind of look like barcodes, and it's really difficult to read. So how do you determine what your price targets you're going to enter in, or your risk is? Because especially since some of those are pretty big apart from where you enter, and they can become illiquid really quickly, and then all the buyers dry up. So how do you deal with that?
And I tend to risk off level 2, so I'll usually only enter a trade if I see some good support. Usually I prefer it if it's at least 2 bids. If there's just one huge bid, I'm pretty comfortable having that be my risk. I like to have at least 2, and I kind of think of them as warning bells. Like if I'm in a stock that is trading maybe 30 million shares a day, and I see a bid holding support at 2 million shares, I'm like, okay, that's pretty good. But I've seen a lot of people just blow through that. But if there's a couple bids, then I usually have reaction time quick enough where if they start pecking away at the support, I'll get out, because my position size is relatively small still in stock market world. So I can usually squeeze out of there pretty safely.
What would be your average position size? Like, because you're scalping, I'm assuming you're kind of going in small and slowly just taking pieces of it. You're not just going all in at one time.
Right. Yeah. So right now my position size is up to 2,000 max. That's the first time I've ever had that big of a size. Last month it was, we've only been 2 days of this month. But what I've been doing is increasing position size by $250 every month. So last month it was max size 1750, and I only use that size if I'm really comfortable with the trade. If it's A plus, there's good support, there's just good odds. I like the pattern, all that stuff. As for how many times I go max size, not very often. I think last month maybe a handful of times, maybe 5 times. Just there haven't been that many A plus that I've seen. When there are, I need to be taking that size, and it's still tough because it's a lot. That's a big size, but I'm just to the point where I need to push, and I always beat myself up. I'm like, I had no reason not to go full size there.
Yeah, and is full size that total amount on the whole trade, or is that every time you get in and out, you're going with that position?
That would be max size at one time.
Okay. Yeah. And do you typically scale into the trade and then scale out of the trade, or you just go all in and then just kind of scale that based off of what direction you think the stock is going to go?
I've been going all in. I think pretty much every time. I've always done that. Unless, I mean, it's in a liquid market, so I've been picking up some things like, better to show you examples if I can.
Did you try S4 today?
Yeah, I traded it a bunch and screwed up most of it.
Yeah.
Yeah, this ugly execution on that one. But like if I'm watching a breakout level, sometimes in this liquid market, I've found it's kind of fun and effective to throw like a half size bid at support, or like a couple pennies above support, or fractions of pennies, because they're OTCs. Because I don't want to get filled on panic, so I'm not going to have a full size bid down there, if that makes sense. But if I get lucky and somebody just hits my bid down there and I get half size, great. I've had plenty of scalps that way where I just play the liquid chart spikes, where they're the one seller that hits the bottom, and then I can just piece out up here, and my size is small enough where I can usually pull 1 or 2 out.
You're just basically taking profits based off of movements on there, of like the price and efficiency of where it's just all of a sudden just kind of going up. Yeah. And so with some of the problems that you're having past, because you were saying that you kind of dug yourself into a hole, how did you work your way out of that? What type of behaviors, or did you notice any behaviors that was causing that hole? What type of things was actually, kind of bringing down your drawdowns and kind of blowing up your account?
Yeah. Well, the most damage was right after I sized up massive. That was just too much size. I just couldn't handle it emotionally. So that was a couple grand of losses that really long time. Because if you reset with $300 account, it's going to take a long time to make that back up.
Yeah.
But in my experience, that was just the only way to do it. I can't just size up and be better. I just had to grow into it. The turning point though was Paula Douglas had a forward in Disciplined Trader, a book you turned me on to. And it was talking about one of the homework assignments. I can't remember, I'll probably butcher this, but it was just talking about you need to write down your goals or something, write down your beliefs.
Yeah.
And it was really challenging. I found that I physically couldn't write I deserve to make money in the market. And I was like, what's my deal? It's just a trip. So I thought about it for a long time, did some internal sorting, and eventually wrote it down and believed it, and was like, I'm not a bad person. I'm not selfish for making money in the market. I do sort of deserve it because I've been working at it for years now. Good at it, blah, blah, blah. So eventually I pushed through it and was like, I believe this, and really made a huge difference.
Yeah. It's kind of, and it's interesting of how, even though we don't really know what we're doing in the markets, what we believe deep down actually affects of how we're trading, and how it actually affects what we're taking from the markets on a daily basis. And Polly T. Webb, for those who don't know, she's actually Mark Douglas's wife. So she's Polly T. Webb, and you can find her YouTube. You can find her on polytwebb.com. It's also markdouglas.com as well. But So when you're working through that, did you find any kind of interesting things about yourself that you didn't notice, or something that you kind of was like an aha moment during that type of a process that kind of helped you kind of realize more of like, okay, I need to downsize and slowly increase my position size later on, not kind of do what a lot of newer traders do, is they just want to make the money, so they start slapping on larger and larger size, especially if you make up losses.
Yeah.
Yeah.
That was the biggest aha, was just the, I was self-sabotaging and I didn't believe I deserved to make money. And that was just never going to work. It's amazing what our beliefs affect. It was nuts.
Yeah.
That was the biggest one. There have been a lot of mini ahas the last couple months as I've become profitable. One of them is just, I learned my comfort zone and my style better. Just became more comfortable with what I'm doing. Because I know that when I post charts, like, they're not sexy. The scalping is not sexy. It's like you take this much of a move like 8 times in a day and it doesn't look good, because you want to be the guy that, you know, enters here and takes the whole meat. But I just can't be Eric, you know. I don't think, I have never let a stock go past 20%.
Yeah. I took 55% of what was it, ELXA yesterday. I bought into the day before, sold it, just swung it overnight. 55% of it. So, but we're all different. We all have different ways of trading, different ways of seeing information. I have a lot more patience to hold onto a trade and, you know, take a lot larger moves. And a lot of that is based off of how I trade, you know, mechanical trading versus kind of more, you're more of a discretionary trader, aren't you?
I am.
You get into it and you make the decisions kind of on fly.
I really am. Yeah.
Yeah. And I know a while back you were talking about doing things like that 20 sample set style of trading. Did you find any benefit from that? And what type of things did you realize when you're doing that 20 sample sets?
It was great. And that is, I started my new leaf over in August doing that. It was mechanical. I documented everything, and it was great. I think it created a really good foundation for me to build on. I don't think you can really just, it's tough because I've been trading and now being such a deep hole and now becoming profitable. It's hard for me to prescribe because everybody has to go through their own journey. But it's just, you can't just jump in as a discretionary trader. I don't think you have to do something like that. Having data to back up your entries and exits. You have to do the 20 set. I think it's the easiest way, and it's super benefit. Just gives you a really good foundation.
Yeah. And one of the things I kind of learned over the years of trading was that most traders are trading mechanically. They're just using discretionary mode of trading. And so in order for them to become more consistent, they have to kind of, even if you're, you know, having a mental stop, which is a lot of traders do, is they use a mental stop instead of like a physical stop like I do, is they have to kind of go back into the mechanical form of trading, is identifying a specific pattern or edge in the market and start to try to just learn that, you know, there's going to be a series of wins and losses, and you have to kind of just get used to the outcome of every trade. And I think a lot of traders, by, you know, if you can identify an edge, doing that sample set of trading, it helps you kind of realize that whether you're trading either works or it doesn't. Maybe you're trading you know, an edge or a pattern that just doesn't really have really much of a percentage wise of actually being profitable. I mean, you could be trading a pattern that's only profitable 35% of the time, but then you're having a hard time getting losses and you're taking massive losses, you know. And I know there's traders out there that have a winning percentage of like 20% on a certain pattern, but when that pattern hits, it's like a, you know, 200, 300, 40% gain versus, but they're taking several losses in a row, and it's just how they manage that losses. And are they okay with taking those type of losses?
Right.
So, yeah. And so what was some of the more beneficial things for yourself when you were kind of getting at yourself out of the hole? When you were, you know, trading, what was some of the resources that you found was really beneficial? What was some of the, did you actually talk to a lot of people in different groups? Are you sign up for any sort of services or any mentorship or anything like that?
It's a good question. So the thing that helped me was just drawing inward. Since August, like, I stopped watching podcasts. I don't watch any. I used to watch Pre-Market Prep with Tim Bowen every day. It was super fun, and I kind of miss those people. I kind of feel like I lost those friends just because I was watching, you know, Matt Monaco and Bryce, and it was fun. but I just had to turn it off. And every time I have signed up for a service since then, I try it and I'm like, I hate this. Like, this is not my trading style, and I just wasted all that money. So I just have shut off. I just kind of live in my hole now, and just the more I just trade and trust my executions, the better I do.
Yeah.
What I found, because it's kind of a weird style. It's not that easy to explain. I just have pretty good intuition about it, and the less inhibition I have, as long as I'm following my sizing rules, the better I do, and the less fear I have, the better I do, for sure.
Yeah. It's always pretty interesting that a lot of the times when people are kind of struggling in the market, they try to learn more and it makes their trading worse. There's a direct correlation between what you're trying to learn and how bad your trading is, because it kind of gives you confusion of what you're supposed to be looking for. I do think for people that have been trading long enough, have already developed an edge in their trading style, by turning all that stuff off and just focusing on the steps of how to get themselves, identifying the edge, trusting the edge, and trusting yourself that you're capable of cutting losses and taking profits when you're supposed to be, it kind of allows you to kind of grow in baby steps versus just kind of going, I need more information. I need to find another indicator or more chat rooms. And I have done a video in the past of where I think people get reliant on their educators and their gurus for different types of, it's almost like an addiction of what they do is they have to go back to the chat rooms, they have to go back to stuff because they will get a random fix of this trade that I heard from this chat room was profitable, but it still doesn't actually allow you to grow yourself, and it also doesn't give you confidence. So when you're trading, I know a lot of people have a difficult time with cutting losses. Did you ever struggle with cutting losses in the beginning, and how do you with cutting losses now?
That's a great question. Before I answer that question, I'll tell you one thing that really helped dig my hole. Hardcore is I was signed up for an alert service, which was a really intense, terrible service where you get a text saying buy this, and it goes up, create like huge percentages, like 50, 100, 200% in like minutes or seconds. And you're usually late and usually by the top. But it created such an impulse in me to buy. Whenever I heard a price alert, I had to get that out of me for months and months. The damage it caused.
Did you want to say the alert service name or not really?
It's embarrassing, but it was Tim's, the supernova alerts, Tim Sykes. And like they were good calls, but you had to be early, and that's just no way to trade. Makes me cringe real bad now. But we all start somewhere. So, sorry, what was your original question?
So I was asking, a lot of traders have difficult time with cutting losses, and that's something I struggled for a very long time. Did you have the same experience when you were trading early on, and how do you deal with that, and how do you deal with that now with larger size?
I think something that's helped me is I've never had that. I have the opposite, where I've developed as a scalper because I realized like I really hate losses, like of any size. Right now, my actual loss that I'm actually okay with is about $15. Any more than that, and I'm like, that hurts, even though I'm trading with like 2,000 size max, which means I have wins of sometimes hundreds of dollars. I still I can't be okay with losing $20. So that's just not something I've struggled with, and I'm really thankful. That's not in me.
That's really good, because that's something that I've struggled with for a long time, and still sometimes getting over. The mechanical trading has helped it a lot. I think my max loss per trade is like $2.50, $2.80 now. So, and I'm taking 15 to 20% in the current market. I'm still taking pretty large profits out of the current market. But I do also sometimes will go through a series of 3-4 losses in a day in a row. But taking $2.80 or something like that isn't that big of a deal. So when you're trading this stuff, is there certain types of things, especially with the markets cooling down at OTCs, is there anything that you specifically look for? Are you more of a breakout pattern? Are you looking for morning panic dip buys? What type of stuff are you looking for in the market right now?
It's easiest explained by just saying I'm a breakout buyer, and I buy strength. I've just found that generally I'm really not good at buying weakness at all. I hate it when I do it, even if it's successful, like even if I'm buying at a support level hoping it bounces. I still don't like it at all. I'm way more comfortable giving up a few percentages and just buying at the top when I can tell it's going to go higher. So I look for strength levels of consolidation, and then for that supply to get taken out. That's, in short, that's what I trade pretty much all day, all the time.
And do you base your decision where risk is level is at, or where the break gets at from, looking at previous day's charts, or how do you determine, like, are you a first green day kind of breakout buyer, or do you usually wait for it to kind of set up some sort of a setup over multiple days and then attack it later on?
I use the daily chart. I think this is going to answer your question. I look at the daily chart, and my my level of comfort with the trade goes up if the daily chart volume is good, and if like I'm looking at S4 right now. It's a huge daily breakout, massive volume comparatively. So that gives me a lot of confidence in the stock. As for my actual trading levels, I pretty much do only intraday currently. So if I am watching S4 consolidate at 5.5, I would buy in at 5.5, or actually where I bought today was 5.38. So right before I was anticipating the breakout, seeing the bids stack up, good support. So I entered at 5.38. I was actually risking like 5.35. So it's just like a tiny, like 1%. And I ended up selling into that breakout because I didn't really trust it. I didn't trade super well today. But I sold into that pop. So I don't know if that answers the question.
Yeah, so you normally are trading the intraday breakouts, not breakouts on a longer term time frame. Yeah. And have you ever experienced, or how do you deal with the experience of where it breaks out and then pulls right back under? And do you just cut your losses and reevaluate it as it maybe if it breaks out again from that level? Yeah. Or do you typically wait a little bit longer to see what happens?
Something I've adopted in this market, since there's a lot less follow through, is I always piece out every single time I trade. I piece out in 2 sells usually, which saves me because a lot of the times we'll have a breakout over supply, which is great, good volume, and then it just fades. Yeah. But I'll profit because that first breakout, I usually I try to sell into the first minute or two of that peak, and I'm usually pretty good at top ticking at least that little move. And then I'll usually try to hold the second half a little bit. I'm not super great at patience at all. But I'll either, worst case, I'll cut it at my entry and I'll still have profited, or ideally I'll wait a little longer, which is what I did not do today on S4, but that's helped me be pretty dang consistent as the scaling out basically. Yeah.
Yeah, that's something that I also learned from Mark Douglas as well, is when you're trading, you want to take profits as the market is making money available to you. Is that something you kind of came to the conclusion yourself, or was that something that you kind of heard or saw from other traders to scale out the trade to take profits?
It's kind of just a habit I got into. I've heard a lot of traders talk about it, but it's something I started doing when I used Schwab last year, and that's exclusively because of commission-free trading. Without it, it would just slice me up. And that was another key to my success this year, is commission-free trading, because with scalping and scaling out of OTCs, there's no way I could be profitable if I had
with the commissions. Yeah.
No way.
And
not when I'm taking 2% gains on a regular basis. Yeah. It doesn't add up.
No. And so with you being a scalper, I'm assuming you're tracking your trades, you're tracking data. With me being a mechanical trader, I have specific price targets that I aim for. Do you have specific price targets, or how do you know when you get out of the position? Do you just, I know you get it out of the first pop, but when do you actually want to sell your second half, or how do you determine that?
It's tough. There's a lot of areas I know that I could do a lot better if I just looked at some data, and I just haven't had the time. I haven't made the time to do that. But I guess how do I know? In reality, I usually get out of the second piece by looking at just dollar, like profit and loss. Like just looking at how much I would make if I got out. And if I think it's going to go up more, I'll try to stay, or I won't, and I'll get out and I'll scalp that second move if there's another breakout or things like that.
Okay. So it's more based off of a feeling of what you have in the chart, your past experiences, and how comfortable you are with what's going on.
Yeah.
Yeah. And when you sell the second half, do you normally say if it goes below, do you increase your risk and saying if it goes below where I'm still in profit, I'm going to take it, but it's not going to be where your original risk level was?
Typically.
Yeah. So you're almost always getting out of the trade with some sort of profit, regardless if it's a small profit or what you actually were trying to get out of the trade with. And that's pretty good. And so I don't remember if I asked you this question. Have you like subscribed to like a challenge student? Are you subscribed to any like guru that's other than alert services, but you're pretty much a self-taught type of a trader? You may have watched some DVDs, but ultimately you're pretty much doing this all on your own, right?
I pretty much am. I mean, we all get so much from people we come in contact with, like yourself. I've read a bunch of Mark Douglas's books. I've watched a lot of Tim Sykes's videos, and just being on Twitter, like you pick up so much information. So it's not like I had to make it up, but my current strategy, I don't think is really taught anywhere. It's just kind of random and it works for me. So
yeah, which is really good. And so with the strategy that you're trading now, is it the similar as the same when first started trading, or did you kind of develop the eye for what you notice in the market today? Or is it something you kind of just fell upon? How did that take place?
yeah, good question. It's very different. I first started trading looking like basically trying to only trade patterns. At first you see stocks and you don't know what you're looking at. You don't see what patterns or anything, but it's developed so much different. It's to the point where I just know if it's a good trade just by looking at the level 2 and the chart. So.
And what was the process that you got from in the beginning to developing your edge now? How did you start to eliminate some of the trades that weren't working and just focusing on, because it sounds like you're only trading one type of a setup every day. So a lot of newer traders struggle with that discipline of, if my pattern is not there, I'm not going to place a trade. Oftentimes they place a trade out of, I need to make money or out of boredom trading. How do you actually deal with that? And how did you deal with that in the past to kind of overcome that type of scenario? Especially with OTCs pretty dying now, it seems like there's a trade a couple of times a week, but there's sometimes there's no trades in OTCs.
It's true. Yeah. Losing lots of money and hurting pretty bad about it. I think that's the only way I learned, is just now I know I'm bad at buying weakness. So I see dips and I'm like, that's probably going to pop. It'll probably recover, but I'm not touching it because I know every time I do, it just sucks. And I just suck at buying weakness. So lots of trial and error. And I do journal all of my trades. So I break them up into setups. So I know when I'm trading just trash that I shouldn't. Just looking at my trades, like almost all of them are breakouts. There's a lot of OT swizzles, just consolidation. There's a couple ABCDs, but there's not a bunch in there that shouldn't be there. Like not a bunch of random stuff, mostly just strength plays.
Yeah, so it sounds like you're trading about 3 patterns: OT swizzle, ABCD pattern, and intraday breakout. Are those the only ones you trade, or is that the only ones that you stick with right now? Is those ones?
That's a lot of it. Those are all afternoon plays, and I haven't been trading a lot in the morning. There have been morning plays, like today. I really beat myself up for not waking up earlier. I was just super out of it and slept in, and that just threw my whole day off. But
yeah,
my 2 favorite morning plays are, I call them OTC spikes and OTC gap and crap reversal. So stocks, I mean, you know them, but stocks that gap and then they die. But if they retake that gap level, that's a really good breakout usually. And then the OTC spikes are stocks that gap and just fly at open. And those are the riskiest plays. And I haven't done them in a while because the market has just not warranted it at all.
Yeah.
But those are a lot of fun. They just haven't been around in a while.
And earlier you were talking about how you're focusing more on A plus setup. So I've noticed a lot of newer traders have a hard time classifying what is an A setup, an A plus setup, a B setup, a C setup. So when you're actually doing that, how do you determine yourself what is an A plus setup, a B setup, and so on? So that way you can avoid taking maybe a setup that was working really well in the past, but just isn't working in the current market. How do you determine that type of stuff?
Yeah, it's all just kind of in my head at this point, but some factors that I play into it are, is the volume good? One of the main things is there bid support? Because if you're just playing with illiquidity, like the range is 20%, you can't full size that. You're suicidal if you do that. So is there good support? Is there a clean breakout level? Those are the main ones, and I'll size up as appropriate with those. And I consider myself a degen, meaning I trade a lot, even when I really shouldn't. And I have made that work because I don't size up. I don't size consistently for all the plays because they don't all warrant that. So even though I'll play in illiquidity land where the range is terrible, I'll probably use a couple $100 size. Like I had a trade today on, what was it? NHMD, one of the beloved barcode stocks, dub3, and each tick is, I think, 5% risk, and there's no way I'm going to use $2,000 on that ever. I don't think. So I used the $300 position and scalped it and made 10 bucks, I think. Yeah. So I'll trade it, and I'm trying to get more comfortable taking stuff like that, because to me it's like if I'm right and I know the trend, I should be in there. I should be profiting, even if it's not with $2,000. I should be in there. Like there's really no reason to not take it. Just size appropriately and let it work.
So you're basically looking at what you define as a pattern that you are familiar with, and you're basically saying, I have an obligation to buy this, and the trade either works or it doesn't. And you're confident enough that if it doesn't work, you can cut your losses quickly enough. So when you're trading your pattern, whatever it is, with the OTCs, like you said, it can be even, one tick could be 5% or 10%. I'm assuming that you're sizing into it based off of the risk involved with it, 5% or 10% loss, and you're kind of judging that of how much capital you can be putting on that. How do you judge of how much capital you can be put down on each trade? Is it going to be a $300 position, a $500 position? Is that purely based off of the percent, that you're risking on, or how do you determine if how much is going to be a lot, like a full size position?
Yeah, that's a good question. I used to use a risk calculator for my sizing. I used to put in my risk and then, from there, what I'd be willing to lose, that kind of thing. I haven't done that for quite a while now. I just use flat rate calculator. So I just say my max position size is $2,000. The stock is, 2 cents. How many shares do I want? And that gives me my max size. But where the intuition comes in is I look at the chart and I look at the risk percentage wise every time before I enter. And if it's tight, if it's like 1%, I'll try to do full size. But these days it's usually not that tight. So I usually don't end up with full size. So intuition, but it gauges off the percentage risk.
Yeah. And do you consider the intuition more of just past history with charts, being familiar with how they move? Or is that more like, I think this is going to happen, so therefore I'm just going to buy into it and hope that it happens? How would you just, differentiate intuition versus experience?
That's a tough one. Probably, I'm only comfortable taking these trades that I'm taking due to experience. And just with my style of trading, if I have an entry that I can't risk my entry, I probably didn't do it right. I usually try to buy, even if it's like a mini breakout or somebody throws a tiny or a really low ask in there, I'll take that so that I can risk that. And that makes me more comfortable to trade. I'm not sure how to answer your question though. I don't know if that just came from years of like not that long, but a year and a half of experience or what, but it's developed over time, I guess.
Yeah, So, because I've noticed a lot of newer traders, they think they have the intuition for stock going up, or they think they have the ability to, kind of guess what the market's going to be. And sometimes the problem is sometimes you're going to be right. And sometimes you're going to think that this stock is going to do what it's going to do, and you're horribly wrong, and it can turn out into being a huge drawdown. And so when you're talking and you're saying, I have this good intuition, I hear you saying really good things about your trades, and you're talking about how you have this skill to trade them. And that's what I'm saying, like, I don't think it's intuition. I think it's more of experience with knowing that you're confident enough to cut the trade where you predetermine that. And with your trading, one of the things is the confident trader knows that, if this happens, I'm going to react in this way. The stock comes down below your entry level, and it's going to hit your risk with that hesitation and cut your loss. Regardless, you're not going to have the emotional attachment to it.
Yeah.
And a lot of newer traders, they kind of focus more on the gut feeling versus you're saying, this is what I see in the chart, this is what's happening. And maybe you may get out of the trade out of the gut feeling, but that's also through experience of how that gut feeling kind of translated in the past of where this bad thing kind of happened. And I don't want to experience that anymore through
Yeah.
So
yeah, definitely.
Yeah. And so that's one of the things that I wanted to see if we could clarify. And with your trading now, do you have any kind of future plans of like maybe moving to OTC, to like listed stocks, or you can predominantly just stick to OTCs? And are you still increasing your size by $250 per month? And why did you choose that specific dollar amount as well? So
Sure. So my problem right now is I am making money every month. And I laugh because it's like I know I could trade listed, I could learn other things, but I have been consistent at this. So I kind of feel guilty in a way, like I'm not nose to the grindstone, I'm not learning new stuff. I'm not really even crunching data. I make my watch list and I just trade my thing. And it's been working for quite a while now. So I kind of feel like if it's not broken, I shouldn't work on it.
yeah.
But yeah, I think if until that point where I can't make money in the OTCs, I think I'm probably pretty happy with it, especially since, I've got a baby, I've got a family, I've got a full-time job. I'm just kind of happy cruising right now.
Yeah.
And I think if OTC volume picks up, I'm going to do really pretty great because I'm making this money in illiquidity. I've traded a few days of hot market. I thought the first few days of July were hot market. I think it's because people were like, okay, it's a new year, it's hot winter trading, let's go. And then it turned out to be 3 days, but those were some great days. So
was that in July or January?
It was January.
Okay, because you said July. I was like, sorry. July, that's not winter.
No. Yeah, January first week. But
and so
yeah, for now, I'm pretty happy with OTCs.
Okay. And so do you still plan on increasing your size by the 250 per month? And why did you choose that specific dollar amount? Is that a percentage of your overall capital, or is that just a size that you're comfortable with kind of laying on top of what you're currently doing?
Yeah, where did that start? I think it started because I started with $500 size in August, and then 750 just kind of felt right. And for how much I made, like $500, my account was about $800 at that point. So I was like, okay, my sizing is about my account size, which I don't know if mathematically it made any difference or made sense, but it felt good. I was like, okay, so 750 is about right. Next month I did 1,000, and then 1,250, 1,500, 1,750. Now I'm at 2. So probably keep it up, especially since it doesn't seem to be affecting my performance. I kind of feel like if you're sized correctly, you should be able to trade the same, with whatever size you use, and it's not affecting me, and my profiting has gone up every month because of it. So I'm like, well, this seems to be working.
Yeah. Do you also think by increasing your size, because the way that you're viewing trading, that the confidence that you have in your patterns, the confidence that you have in yourself to cut your losses and take your profits, it also kind of helps yourself increase the size slowly over time? Because it sounds like you're doing it for 30 days or a whole month, and then you increase the size. So if you have any trading errors, or you start to increase your size and you start to see a lot of losses or problems with your trading, has that ever happened to you? And how do you actually go around dealing with that before you increase the next size?
Yeah, it is a little nerve wracking. Even the first day of this month, I was like, oh, 2000. That's a new one. And I don't think I've ever taken $2,000 sizes, even when I sized up big last January. I think that's a new number for me. So it
Yeah.
takes some getting used to, but you just have to do it to grow, I think. And you just have to say, this is a pattern I know. There's no reason to be scared. Just do the thing, and you get used to it. The flip coin side of that is when I sized up crazy big last January. I already talked about that, but it definitely affected everything. I couldn't cut a loss. I couldn't trade at all. I was just way too scared. So.
And so when you're increasing your size now, you've experienced discomfort. How long does it usually take when you've increased your size incrementally before you start to become comfortable with that? And you're like, okay, this doesn't really affect my mental state of mind or emotional state of mind when you're actually trading. Is it usually by the end of the month, or is like the first week you're kind of nerve wracked, and then 2-3 weeks into it, you're starting to just kind of everything's gone?
I'd say 1 to 2 weeks. I think by mid-month, I kind of get used to it. First week is tough. I feel like as a trader, the first week is tough mentally, regardless, because you're like new template or new plate. I don't want to just start out red. Then you feel like you're losing money, even though it's just another day. But
yeah, that's really good. And so with trading the OTCs, do you have any plans of like shorting anything, or do you have any plans of like expanding your pattern like recognition the way that you're trading now, or are you just going to stick to the 3 patterns that you currently do?
Well,
because OTCs can also be higher price stocks, $4, $5, $6. Yeah.
Right. It's tough because, like I said, it's hard to think about doing a whole lot of other stuff when I'm doing well, when things are working fine. So I don't have a ton of motivation to learn new things right now. I have had the thought it would be really fun to be able to short these.
Yeah.
They're penny stocks, and I know that, but I also have traded them for years, and it's not like they're just a stock. Like, it's not just going to explode on you and like quadruple. It just doesn't happen. But I know that I haven't looked into it because I know my position size is, I think you have to have a ton of money to short penny stocks. Like, I don't know, $1 per share or something. I remember hearing the actual ratio of capital that brokers want you to have, and I don't think it's going to be anytime soon.
Yeah. Because I think the 250 rule applies to that. You have to have $2.50 per share that you have into the stock. And I know it depends on the broker. If the stock is over, like say $1, E-Trade will actually allow you, if they have shares short, to actually allow you to short it. But if it's less than $1, they won't. Is there a price range that you normally trade within, or is it pretty much any OTC stock? Is there a certain comfortable range that you're in?
There definitely is a sweet spot. When it gets under a penny, I get a little nervous. I usually only trade, I sometimes trade stocks cheaper, but I really don't like it at all. I like watching stocks around a penny. It's a really big level. But my favorite are between a penny and maybe 20 cents. You get higher than that, you get into the dollar stocks, they just move a lot differently, especially the OTCs. They're just really strange, strange. So do they kind of, the higher price stocks to you, do they kind of feel more like a listed stock of how they move and how the level twos react, or is it just even completely different to that too? Like a CYDY is an OTC that's a higher price OTC. Yeah. They kind of feel like barcode stocks because their consolidation is weird. The action is just strange. Like, there was an example today. I don't usually trade them if I have a choice. ABML, I think that's about $1. And it's just weird. Hard to gauge the volume for me. There's huge drops, and it's more barcodey if you look at the price action than anything else. Definitely not like this. Yeah. And
if, like, people who's watching this, what would you recommend as a source? Because a lot of people, want to know about books or some sort of content. What was some of the books that was really integral to your type of trading journey? And what books would you recommend?
I haven't finished it yet, but I've really, really liked Trading in the Zone. Mark Douglas generally, love his videos, The Disciplined Trader, is that what it's called? Becoming the Disciplined Trader?
Yeah, Becoming the Disciplined Trader, yeah.
That's a very, very good book. I don't think I finished that either. I'm not a very good, I guess my follow through sucks on these. I don't know.
Yeah.
But I
Both
think
books are just halfway read and you're just like, yeah.
They are. Easy. But for a foundation, I think those are really good books.
Yeah. And with the Become the Disciplined Trader, because like you were saying before, there's a lot of kind of homework type of exercises that you're supposed to do. It seems like you derived a lot of benefit from them. Have you ever had to do that beforehand, or is that the first experience that you had of trying to do those type of external non-market related type of exercises?
I think that was the first I took really seriously. Because it's tough. I mean, it's really soul searching, diving into like what you mean when you say you believe something, and because it's deep. And I think if you take it seriously, it'll make a difference. But I had to get to the point of being willing to do that. It took a long time.
Yeah, it's definitely hard to try to look inwards and say this, whatever I really want. You want to make the money, but do you really actually feel like you deserve that money as well?
Right.
And if you don't, why don't you? So, and to wrap things up a little bit, with your trading journey in the future and OTCs, if is there any way, if people want to reach out to you, did you want to give out like your Twitter or anything like that to people? So I can go ahead and post that link below, but you can also say what your Twitter name is, because I forgot.
I think it's, oh dear.
I think it's Tarantino.
Let me check. Yeah, Quinton Trades.
Quinton Trades, excellent. So the way that we met was through that Sunday meetings. We're still going to be going forward with that at some point in the future, right?
I hope so. Yeah.
I hope so too. So
definitely missed it.
Yeah. So are you going to be the one that's going to be managing that? If people wanted to join a group like that, do they reach out to you, or how do they actually join the group of traders that we kind of meet on Sundays and try to grow that a little bit more?
For sure. Yeah, that'd be great. They could reach out to me. They could reach out to you. Really, anybody in the group. It's not like we're exclusive. It's just a bunch of dudes that like hanging out, talking stocks. So yeah, I would love it. I really thrive off those kinds of relationships, and still feel like I'm a really newbie trader. So I don't know how much I could teach anybody, but I'm more than willing to impart anything I can.
Well, some of the great things about you is more of your mindset. Even though you're new, you still have a very different mindset compared to a lot of newer traders. Even myself, when I was trading around your time, your mindset's worlds apart compared to when I was trading at how many years you have versus how many years I have now. It took me a lot longer to get there, and a lot of it for myself was more of, I wasn't trying to be consistent. I was basically gambling. And then back when when coronavirus hit, I quit my job and became a full-time trader. I had to try to figure things out. And it took about 2 years for me to start, a first year just to gather data, to try to develop a system. And so it's kind of the similar journey of you. You just were able to do it a lot faster because of the way that you view different things in the markets, and also the confidence you have in yourself. So I had a question, but I forgot it. But I don't remember. So I guess that's pretty much it, man. Well, thanks for your time. And we'll try to reach out, see when the Sunday meetings are going to be going. Oh, yeah. Another question I had was, with the Sunday meetings, I noticed that some people get influenced based off of what is working for other traders in the market. And with you being able to talk to different people in these Sunday meetings, how did you limit of not trying to trade, maybe let's say swing traders really working and maybe your setups weren't? How did you actually decide not to take on, what other people were doing and stick to what you were doing instead of, trying to branch out? How did you do that?
It was a challenge, but just even being on Twitter is a challenge because everybody has ideas. They all have their own niche. So you kind of get used to it. I think I'm to the point where I can still get excited for people that have trades. I think of Roy, just swing traders or options. Like, I'm not going to trade that stuff.
Yeah.
But I can recognize it and be like, yeah, that's a sick setup right there.
Yeah.
So you get more comfortable with what you do, and you don't let it affect you anymore.
Yeah. So that's really good because I've seen Roy a lot with his option trading the Apple and stuff, and he's doing really well with that.
Yeah.
And like one of the things I struggled when I was newer was trying to chase the next what seemed like the hot thing. Like my edge wasn't working anymore. I tried to chase what somebody else was doing, but I didn't fully understand what they're doing. So it kind of was this repetitiveness of learning something different, and then that thing by the time you learned it just didn't work anymore. So
yeah,
yeah,
and I think a key to having that, just stopping that, is being okay not having any trades. That is something I'm still not great at. I still usually trade every day, even though maybe I shouldn't, even if it's with small size, but I'm still looking at only OTCs. And some days there's quite literally nothing on my scanners. There's like nothing moving at all. And I'm like, oh, well, I'm not going to trade. I'm not going to go look at other stuff and just throw money at it, because I've done that plenty and it pretty much never works.
Yeah, so you're just learning to stay in your lane pretty much. I'm just saying, this is what I'm good at, this is what I recognize, and just stick with that. That's really good.
Yeah.
So, but that's pretty much it. We'll have to get back together for the Sunday meetings and try to figure out when we can do that again.